Let's connect with Arvind Sanger. He is managing partner with Geosphere Capital Management, a global firm which is in money management. And Arvind and his team, they manage assets worth $1.5 billion. And he runs more like a global dedicated portfolio with focus on Indian equities and global commodities. Arvind, what a delight to have you back on ET Now. Thank you for joining us. Let me first start with the moot point. Obama has been re-elected. What do you think this means for the U.S. economy?
Well, I think the one thing that it means is that Fed policy is going to have some continuity, and that's what's driving global liquidity. So that part, I think, is the easy part. The other part that I think is more difficult to call is how the whole discussion about the fiscal cliff will be resolved. And I think there the issues are, with the Republican Congress and with the Democrats controlling the Senate and the presidency, there is going to have to be some give and take, and what form that compromise takes, how much tax increases come in, how much spending cuts come in, and how quickly they come in, is something that the market's going to be watching with great keenness, because that will determine how much of an impact that will have on 2013 economic growth, because there's going to be some amount of fiscal tightening. How much is what remains to be determined. So I think that, I don't see any dramatic changes, given that it's, pretty much a continuation of the status quo from before the election. But I think there are some unresolved issues on which there could be some debate in Washington, and I think that will determine, how things play out.
Arvind, hi, morning. Now that the Democrats are back, do you expect the benign global liquidity environment to continue? And what are your thoughts on the U.S. fiscal cliff? How do you see global events moving?
Well, I think in the next 12 months, Europe will continue to remain an issue, but I think U.S. fiscal policy might become somewhat more important. And I think China, what it does in terms of the new regime or the new leadership that takes over in China, how they effectuate change, how slowly or gradually do they try to impact their growth trajectory. To me, those could be some of the more meaningful events of 2013 on a global basis. I think Europe will remain a problem child, but with periodic outbursts of crises, but with the ECB standing there, I think the meltdown scenario may be off the table, but the crises in Europe will, we will continue to lurch to mini crises, but hopefully not a major blow up.
Arvind, the word on India. For the year 2012, India has been a stellar outperformer. Do you expect, irrespective of the global environment, the outperformance for Indian equities will continue in the short term and the medium term?
I think, once the global so there were two risks that India had earlier this year. One was the global meltdown risk. And that with the central bank and, global liquidity, flight of liquidity out of India, because India is very dependent on foreign flows, as we all know. So now that liquidity fear, I think, is gone away because of U.S. Fed and the ECB have opened the checkbooks in a big way. Then once those liquidity risks off the way, that's one reason why the Indian markets are having a new bull market. But where they go from here, the policy paralysis and the meltdown in the economy because of policy paralysis, that risk has also turned somewhat more, less concerning. With the current finance minister, Mr. Chidambaram, having taken a number of actions to at least signal to investors and to company managements and others that the government gets it, that there is need for government action. So I think a risk of a meltdown to where we were earlier in the year, earlier in 2012, is unlikely. But, where this market goes from here into a new bull market in terms of, crossing past or getting back to previous highs, I think that's going to be dependent on a number of things that are India-specific too, in addition to the global factors we just discussed, and those would have to do with ability to actually execute and follow through on some of the initial good flurry of actions that the finance minister has taken.
Right. Arvind, for the year, India has been the best performing market amongst the BRICS. So within the BRIC region, do you think India will continue to outperform?
India is, whatever term one uses, the tallest midget, the, one-eyed man is king amongst blind men. That has clearly been India's case. And I think the real issue for the other BRIC countries is really China. And they're much more dependent on China re-accelerating. So to the extent that 2013, one of the bigger risks to India's relative outperformance is if China becomes somewhat more attractive after its leadership transition, and if they are able to follow through with some strong, sustainable actions over the next few quarters, then China becomes more attractive, and if China becomes more attractive, then Brazil and Russia become more attractive. And those would be the circumstances in which India would not be the leader but could be the laggard. On the other hand, if China remains, almost feels like shut down for business, but if China remains in a state of transitory flux as a leadership change, the new leadership is trying to consolidate its power. If that remains the circumstance, then the BNDR, Brazil and Russia, could struggle along with the Chinese market. In that case, India could continue to be one of the better performing markets, and certainly one of the better performing markets in the BRIC countries.
Arvind, you also track crude with a magnifying glass. Demand from China is down. Why do you think the prices are still holding up?
I think the oil supply-demand fundamentals are certainly not that tight, notwithstanding the fact that there's probably $10 in the oil price today for Iran risk, maybe $10 to $15 between Iran risk and Iranian oil embargo of the market. So oil, instead of being $108, $109, $110, could be in the mid-80s right now if it were not for those two factors. I'm not sure that either one or both of those factors is going to get resolved in 2013. In the meantime, Chinese growth it continues to be slow for demand for oil. U.S. growth continues to be moderately negative. European growth continues to be moderately negative. So there are both declining demand in the U.S. and Europe and very moderate demand growth in China of low single digits versus high single digits, low double digits, which was the norm for China, for about a decade prior to last year, and that's slowed down dramatically. And I think, therefore, all of that suggests that crude will remain relatively range-bound. Again, other than the political risk, I don't see oil going, too far below 90, 95 on Brent on the low end, and 115, 100 or so on the high end.
Arvind, final question. Market insiders are telling me that as a house, you are very bullish on Indian banks. So within the Indian banking space, where are you picking your spots?
Well, I think, the question is which extreme do you go to, private sector or safety, or the public sector, more speculative. I think that, first of all, I think that the NPA cycle still has obviously some risk in it because you are going to have some issues with restructuring loans, not just in the airline business, which is most obvious, but even in the power business there will be some, and maybe in some of the SMEs there will be some. So there will be more restructuring, more bad loans to come. I think the concern really amongst the ones who want safety is that things are going to get a lot worse before they get better. My assumption is that I'm willing to take a little more risk because I think that a lot of the bad news is priced in, and I don't think the economy is going to go through that painful a correction where what is discounted is not enough and we're going to have to discount a lot more. Therefore, my inclination would be PSU banks, but I mean, would be either PSU banks or private banks which are being traded at the lower end of the valuations because they're perceived to be somewhat more risky in their loan book or what have you. And so there are some of the less expensive, slightly more, I guess, maybe, ones around which there's more concern about bad debt amongst the private banks. Those would be kind of, to me, the best compromise between the two extremes.